Mark. I'm from Blunhouse Technical Analysis, and we're here with another edition of Chart the Markets. And it's another interesting day to be doing this. We had some of our key assets, anyways, down quite a bit over the last couple days. And, lo and behold, just before we came on, there seemed to be a little bit of a recovery. We'll see if it sticks, though. But I think the bigger picture is what we really want to talk about. And, one of the things that we do here is try and learn patience. And for me, that's something that is incredibly difficult. And maybe some of you can relate to that. And as a result, one of the things I've kind of done over time is develop this script to help me not make mistakes, because I have a tendency to be impatient, and I had to teach myself how to do what I was told and to follow the chart. And that's hopefully what we can do here today. And one of the things that we've been talking about in regards to resistance when it comes to Bitcoin's daily chart is this level right here. And this is the 500-day moving average, which is always in pink when you see them on my charts. So you can see the other day it would have been on Monday, basically wicked that level again and pulled right back. Now in our last stream, which was this candle here, do you remember what we talked about? If price was to pull back, would we have three options, right? Up, down, and sideways. If price was to pull back a little bit, do you remember what we talked about as being an obvious place for price to look to hit? Ring a bell? We talked about how the 20 and 50 was sitting there, and if price was to pull back, that would be a likely place for it to go. And that is exactly where it went. Didn't stay there, did it? But it is exactly where it went. Why? Because it's a representation of past price that is a draw for current price, at least in my opinion. And this is why when we talk about where to set entries and that type of thing when it comes to your trading, this is why we say, hey, look to those major moving averages. That's where you might find, or these benches of past price, liquidity, whatever you want to call it. But this is a great example of how price just came down, wicked that level to the penny, and then shot back up again. Now, although that's obviously an encouraging sign, right? When price pulls back and then hits a certain level and bounces upward again, obviously that's bullish. I put that in quotes. But it basically closed right at the T line again. So it's not close, but it's trading currently right at the T line. So do we have any more clarification? Not really. If anything, leaving this wick down here exposed makes you want to look in the rear view mirror to make sure that it doesn't get taken out. We see all the time, don't we? We have these candles that leave these big wicks hanging down, and we get all excited when price starts to move up, and then we don't think about them anymore, and then lo and behold, price will hit something, reverse, and come right back to that level, right? And maybe then move higher. So is this still an uptrend? It is. We're still working under a buy signal. We still have divergence between these two levels, the T line and the 5 EMA. Came back and wicked an expected place for price to go, and then shot higher. But we are still under, even with these three red candles, we're still working under a buy signal. Now, was there any way that we could have seen this before it showed up like this on our daily chart? Yeah, we could have looked back. Could have looked at the 4 hour. The 4 hour is starting to show us a little bit of bullishness. And I think we talked about this chart the other day on Tuesday as well, because this is an example where you have so much divergence between these two levels, which is demonstrating to you that price has some momentum to its trajectory, which in this case is down. When that happens, it takes a tremendous amount of momentum because the pull and the drawdown was so significant. It takes a lot of momentum to pull this up through this level to start to change trend. And I think you can see here, even on this 4-hour chart, you could end up with a third green candle. Come close to or wick this level, bump your head on it, and you may not even change the trend. Right? These are things that over time you'll be able to see quite quickly on different time frames. And here you are in a 4-hour. If this just is our first wave down, we have 2 or 3 green candles that turn out to be a failed breakout, which we've seen before. Then it rolls over, and what this turns out to be is 2 or 3 green candles in what turns out often to be a failed breakout. If it does continue to push, you know exactly where it wants to go. Case in point, this. Right? If this doesn't demonstrate to you how much of a draw and respect that price has for these levels, it should start today. Bang, hits those levels and bounces. Why was that more likely to happen? Well, first off, it's a first touch since it breached the 50 to the upside. But you have both the 20 and the 50 on this chart coming together. And that's just, it's like, layering over building materials to to create more strength. It's the same kind of concept. There's just that much more layered there for price to bounce off of. If it was to break through those levels, then it tells you something else about the market. Right? But that's not what it's doing. You know where it wants to push. It's tried here before. Obviously, we're creating a range now, which is a good thing. It's going to make it easier for you as the trader to trade the chart. But keep an eye on the 4-hour, because the 4-hour will give you a little bit of a look into the daily chart. And what you don't want, is this 4-hour going to look like the weekly? How we had that big move down and this is the first move up. It looks like it fails. So you can see there's a lot of work to do here. And on the weekly, still a downtrend? Yep. Still a downtrend. Can't close above the T line. As soon as you test it, you pull back. Where's the draw for price on the chart?
Going to that 200.
Yeah, you're right. Absolutely. Hi, Rico.
Hey, what's up, brother? How's it going?
Good. And no, you're absolutely right. Back down to the 200. And the scary thing is there's probably 100 tucked in here, I think so. Where you're on right now. But yes, you got support, but you have not broken out on the weekly chart at all. And I actually, as far as candles go, I don't see that as overwhelmingly bullish. So, it's still a slippery slope. And this is where a lot of people can make mistakes, right? The ones they wish they didn't make. Maybe they weren't looking at the weekly chart and didn't see that, that setup. So all they could focus on was the pushing higher. And that's when you get excited without looking at the risk on the chart. In this case, the risk on the chart you're going to see on this weekly. Because if the weekly fails, that's kind of significant, right? So, yeah, it looks promising when you see green candles within these weeklies on daily charts. That daily will make you feel like, hey, maybe you're moving higher. But keep an eye on the weeklies for trend. This is a slippery slope. If it just does not bounce here, you're going to fall into this gap. And then from there, we're talking about, we'll be able to see if we're right that it comes back to this level. So that's BTC. Let's look at BNB. Go to the daily. BNB to me does not look as rastered, it looks a little smoother, which I kind of like. Um, but here we are trying to break through the 100-day moving average, sorry, 200-day moving average, and we start to roll over a little bit. Did pretty much the same thing that Bitcoin's chart did, where you've got the 20 and the 50 sitting here, and that's where you're getting some support. But what happens if this fails? Well, you'll come back to this level, obviously, and if it doesn't hold, this is the failed breakout. Take out these lows, and if money doesn't come in, then you'll end up looking for the next level down as a support measure. If it bounces, you look for it to take out the previous high and then start shooting for that lower value range level. You get yourself into the gap, and then you'll head to the 100 MA, which is kind of representing this shelf here. And when you get to that level, you might chatter for a little bit. That's typically what happens at those volume shelves when you revisit them. And I think it's just a like price chewing away at the shelf until it can make its way through. But sometimes you go, geez, I was having such a great move, and then all of a sudden, chatter, chatter, chatter. It's quite possible what you've encountered is a shelf, and that you just have to chew through the shelf to get into the next level. And the same would apply to the downside, right? You could be having a move to the downside, and then all of a sudden it kind of goes sideways, like we talk about, and then whoop, chewing away at that little shelf. Weekly. So what I like about this weekly chart from a trading perspective is that it's giving us a clear range between the 20 and the 50. You know, we're kind of sitting smack dab in the middle of it at the moment, but that's okay for you, because what you're looking for is, okay, where's the downside? 787, and the upside is 971. Okay, so here's roughly 971. That's the 100. I think I said 787 or something like that. Basically the level of that wick. So that would be the trading range on the weekly, is essentially this level to the downside and this level to the upside on the daily. So now that you know that, when you look at this chart in particular, and this is actually a nice one because you have these two distinct levels here with volume gaps on either side. So we know on the weekly chart what this range is. The 20 and the 50 is exactly the ranges that we just showed on the other chart. Now we have a trading range, right? So we know this is the low end of the range. If this trend down continues, that's our target. If it begins to reverse, the upside is our target. And then you have the confluence on the two time frames. That's what you'll end up having. So where do I go to the downside? That's my lowest, that's the low end of the range on the weekly, high end of the range on the weekly. What we're able to do is we've tracked price and we've kind of trapped it in a range. It's like shooting fish in a barrel. Now you have clean targets, you have very distinct volume gaps to the upside, very distinct gaps to the downside. So you can see how you get to these levels quite clearly. On the weekly, we don't get to see the volume profile, there's just not enough data. But we know we're still in a downtrend. And this just helps you add context to your analysis. But you have to take the time to actually stop, look, think, and process all of these things that you see. And it's one of the reasons why I try and suggest that you, or we as a group collectively, trade less tickers. but get to know the ones that you do trade really, really, really well, so that all of this becomes quite familiar to you without having to do too much work. And it allows you the time to sit down and take a handful of minutes to do the proper type of analysis. But if you're trying to chase and analyze 50 tickers a night or 20 tickers, whatever it is, it's too much for the average person. Like, we don't have to make this any more complicated for ourselves than it already is, right? So at every touch point, when you have the opportunity to simplify your process, maybe do it, especially when things aren't going your way. Especially when things aren't going your way. This is the ETH chart, by the way, and it looks exactly the same as the other two. Now, Solana, because I know, Rico, we were talking about Solana yesterday in your stream. Am I blind? Where the heck was it? Let's find it. The interesting thing on this chart is, what do you pick up? This level of support at 1,000 days. It's actually nice to kind of see this on a crypto chart, because I've showed it to you on stocks and commodities, but you know, sometimes we might see it on Bitcoin's chart, but here it is on Solana's daily. And look how relevant it is as far as support and then resistance. This is a very good sign, in my opinion, to get a buy signal at this level. This is not where you want to fade at all. So this is actually a positive thing, right? To get, and this is, looks like a very clean signal as well. And that showed up on Wednesday the 31st. When did we show it on the 4-hour? It actually shows up on the daily sooner, which is very strange, but nevertheless, you have a good entry. And this thing looks like it wants to run. And what is this? Like, before we met, Rico, if you're still here, I'm not looking at my screen, but like, if you were to see that, that's a sell candle for a lot of people. It was a sell candle for me for a long time too. You know, I'm happy with my 6 or 7 days, depending on your trading style, of course, of my upward mobility here. And then I see that red candle and I go, hey, you know what? I'm done. Taking my toys and going home. That's exactly how I would have interpreted that before deploying this stuff. Now I see that and I'm like, okay, that's just a red candle and it looks like an uptrend. So I'm going to hang out for a while and see what happens until the chart tells me that it's not safe to do that. And lo and behold, I have the following candle, green candle, trading above both the T line and the 5 EMA. Just following the chart. That takes a lot of that guesswork out and deals with having the tendency to often be impatient. But this is a nice clean signal, and it comes at a very important level, 1,000 days of trading history. So that's a very encouraging sign. Typically when you see the 1,000-day on your daily chart, when it does appear, when you switch to a weekly, you're going to see the 200 and somewhere in the neighborhood as well. It always seems to be kind of fractally close. This is where you can make a mistake. Is this a confirmed breakout? No, it's not. And this is actually kind of interesting. So on the weekly chart, big move down, kind of sideways, and then a couple green candles that can't break the T line. We've showed this every single week on various time frames. The concern would be that it doesn't push ahead, it doesn't break trend upward, and it rolls over and becomes a failed breakout. looking to take out the previous level's lows and putting the 200 weekly in play at 103.3. 103.3 on that weekly is way down here. Somewhere in this neighborhood. Which does what? Breaks that 1,000-day. This is why the support of this average is going to be really, really important. Because we've seen what happens on some of our other charts, oil for example, where it had these bounces and bounces and bounces, kept getting support, but never really broke out anywhere, and then lo and behold, breached it and spent a lot of time under there. So we want to make sure, if you're bullish, that you hold this level. There's a lot in here to do it on the daily, the 1,000, the 50, and the 20. But my goodness, if you do break it, it does change. It does change the narrative pretty quick. That's a long run to get up there and start to, because you'd have to break through all this. And don't expect these V-shaped moves. So this will be really interesting to see how this plays out. And then, of course, you've got this big gap down here. And I'm not suggesting to anyone that, oh, don't trade this or anything of that sort. That's not what we're saying. What we're saying is be careful when you're trading it. We talk about not getting hit by something that we didn't see coming. This is the kind of stuff we're talking about. On all of these weekly crypto charts, you're seeing the same move, right? Big move down, weeks of going nowhere, and then the appearance of a breakout. That's all it is right now, is the appearance of a breakout. It's certainly not confirmed. Look where it wicked. It wicked this point of control line again on the volume profile and starts to pull back. So we know that this level, because it is the most concentrated area of volume, will be key to break through it. This gap will bring you here if you can get through it. When you look at some of our momentum indicators, they are encouraging. That's kind of looking like the start of a move higher, but again, it's certainly not confirmed, and these could roll over just as quick. So keep an eye on Solana, Rico, and that 1,000-day, because you don't want it to do what this did, right? That's the 1,000-day, that amber line.
100%.
So very helpful
and we're watching them closely, that's for sure.
Yeah. And the only way that you can do that effectively is if you're not trying to do too much, right? You're not trying to analyze too many tickers at one time. That was always my downfall, is I tried to do too much all the time, and never having enough time to do all the things that I thought I needed to do, right? And maybe paying attention to things that ultimately, as I learned over time, was just noise. Right? Just noise. The only thing I really want to focus on is the price on the chart. Now, here we are. This is Aster. Finally, it's just kind of capitulated back here. This is your first test of the 200 and didn't like it. Right back to the point of control. This is where all the volume is. What is that? 69 cents. So all of the talk about this in the beginning, really, that's all it was, right? It's just talk. 239 to 69 cents. Will there be a day when it takes out that previous high? Perhaps. And when it does, hopefully you're there to trade it. But the only way you're there to trade it is if you have an opportunity to monitor it effectively. This is a great buy signal coming out of consolidation. I like these. Sometimes you get a couple of them, that you end up just having to trade for a bit, but eventually one of them takes off. And this was a real clear. So when you're looking at this, what are you looking at to the upside? You know you want to break through the 100 MA. And if you do, you're looking for that upper value range and or the 200 MA. Those are our targets. Well, there's your 100 you take out. This trend never broke even on this big red candle. And there you found your way up to the 200 MA. And this is why we're talking about tracking price and then trapping it in a range. This is exactly what I'm talking about. You know that the value ranges do that. We know that major moving averages do that, especially this 200 and the 50. Always strong. What do we talk about? Longing into resistance. This is a great example. So find that range, track price like you do, trap it into a range using simple tools, and then just monetize it as it gives you direction on what it wants to do. I probably oversimplified that, but I think that's ultimately what we're trying to do. Get good entries, get safe entries, pay a little bit of insurance. You're not here to pick the bottom and top all the time. But after a while, you're going to see a wick hit that 200 and you're automatically going to hit the sell button. But that just comes with practice and the patience that we talked about. And also confidence. The confidence, once you've done it right, to do it again is invaluable. Right? And if you're always making mistakes, it kills your confidence. And from there, what happens? We just get greedy. Well, I'm going to earn this back. And as all you do is take on more risk. So if we break this chart down to the hourly, do we notice the same kind of patterns that we see on the other time frames? Massive resistance on the 1 hour, break one level, this is a big rejection, break one level, right back down to the next level, which is the 200. You try and break that level, you can't do it. So what happens? You come back down to the next. We've got a little bit of a fish hook. We're trying to take out what again? The 20. When you can see what's happening on the shorter time frames like this, it's very evident that the 20 MA is going to be a key resistance level. We talk all the time, be careful longing into resistance. This is why. So if you want to long, are you going to long after only 1-2 waves down on an hour? Yeah, you might want to wait because there might be another retracement here. You want to make sure you find out what happens with price at the 20, and this is the 500 here on this time frame. Again, this is why we use the longer averages, because we trade fractally and we get to see them on the shorter time frames, and they're also the things that help us trap price within a trading range for it, to make it easier to figure out where it might want to go. So has to figure out what's going on here before you commit anyways on this time frame. But you can understand now how we use the time frames backwards and forwards to help us. And ultimately, when a shorter time frame starts to look a little questionable and you're trying to figure out, well, is it really a move? Is it what's really going on? Just change the time frame. Helps smooth out the chart, the longer time frame does. And then you're realizing, oh, this move up was just a test, ultimately, of the 5 EMA that fails on the 4 hour. On the 1 hour, you were thinking of maybe washing the trade because you've had some positive move higher. Now you're realizing this is a test of the 5 EMA that looks like it's failing, and also at a major moving average that it's failed. Now I'm going to wait around if I'm short already to see how this works out. Okay. Or you take your profit and you wait to re-enter, whatever. Those options are yours, and you earned them because why? Because you had a good entry. Simple or as complicated as that. The entry is key. And you'll notice that in your trading, right? If you don't have a good entry, do you notice how stressful things get and how fast they get stressful? Like really, really quick. If you get a good entry, especially coming out of some consolidation, it's going to make life a lot easier. We're trying to take the anxiety out of this. The thinking that causes you stress. Getting a good entry, long and short, the biggest stress that you're going to have after getting this entry is how to manage the trade to the upside while you continue to make money. I think you can handle it. That's the stress we want to cause you. How much money am I going to make today? This candle would stress a lot of people out, and rightfully so. I get it. Nobody likes to see big red candles at the top of these moves higher. And the choice is yours because you got a good entry on what you want to do up here. You might want to take it all. You might want to take some. But ultimately, even though this is a giant red candle, yeah, the trajectory was down, but the divergence up, the buy sign that you're working under, is still dominant. And then you get a bit of a move higher. The trend never broke. This was just a big red ugly candle in what turned out to be a continuation. The entry is a big part of the anxiety that you feel when you're trading. Because if the entry's bad, and it's the kind of thing that as soon as you click it, you're like, oh, damn it, that was terrible. I shouldn't have done that, right? Like, so just make sure you get the right entry. Be patient, right? The signals are being printed for a reason when they're being printed. There are times when you're like, damn it, why isn't it printing? It looks like it wants to take off. Just relax, right? Just take a breath, and you'll be okay. Let's look at Apple, because this is the advantage, right, of doing these things a couple times a week, where the receipts are there for people to go back and look. And we talk about trading above all your major moving averages. As bullish as that is, which is great, right? You love to be in these moves, getting these continuations higher. But now I think you're probably mature enough to go, okay, I'm very happy to be on the right side of this trade, but I'm also going to be looking in my rear view mirror and in my side view mirrors a little more frequently. I've had several continuations getting support in and around the 20 MA. What happens at the 50? You come back and you chatter here for a little bit, and eventually you roll over. How did we know that was going to be the result? We knew it was going to be the result because the market was telling us that's what it was doing. It was telling us by keeping this divergence to the downside in place, telling us that there's not enough money coming in to change the trend. This is actually a bad sign. Yeah, it's a little doji, maybe indicating the end of a run, but I'm not sure. I don't like the way it fails. Gaps down, actually, beneath the 100, beneath the major moving average. But Apple is doing everything that we said it could potentially do. And in hindsight, it wasn't really all that difficult now to pick up. If this was a stock that you love to trade, let's be honest, most of your trades are long. No question about that. But what are you going to do when the chart's not going up anymore? Are you just going to sit there and stare at it? Like, you can only drink so much coffee waiting for it to reverse. So what are you going to do? You have to monetize the chart in the other direction. And that's not intimidating. It's at first it is, right? I understand that. But when you have a system that's reliable, responsible, predictable, and it's there to help you mitigate risk, you can feel more confident monetizing the chart up and down. If Apple was a stock that you like to trade, one of the time frames that you would be looking at is the 4-hour time frame. Right? And the 4 hour is doing the same thing, trading above all of its major moving averages. And if we don't want to stress ourselves out, part of that is not overthinking. I didn't say not thinking, I said overthinking. Here is a sell signal that you get on a 4-hour chart at a major moving average. And if you weren't comfortable taking the confirmation and you waited for the next one, you can see how it's breaking. If you were just following the chart and sneaking an early entry on what you're hoping to is an early entry onto the daily. Let me blow this up a little bit. Do you not feel like you're in the driver's seat? This is where your 4-hour signal fired. There's your daily signal, and there's your 4-hour would have been up here. So by watching that 4-hour chart, and because Apple's only, is one of the 5 things that you're charting on a regular basis, you're going to see that 4-hour signal at that top. That's the confirmation. You've seen that doji and you probably would have hammered the sell, the short button, but nevertheless, it was pretty clean what was going on. But as all you had to do was wait for that signal. And here you are thinking that, oh, darn it, I'm late by 12 hours. I missed it already. No, you didn't. This is just the insurance you were paying. The time it took for the market to figure out what it wanted to do before I gave you this. And now that it has, is all you're doing is managing your trade that you're profitable in early. This, candle hit your 20, closed below the 50. Did it break trend even when it moved higher? No. Big wick here, breaching the 50 on this 4-hour. Did it break trend? No. As a matter of fact, the down is really what kicked off this whole big move to the downside. This impulse move down in this wave. Does it remind you of anything else we talk about? Impulse down and then you go sideways, really essentially nowhere, waiting for what? Time to catch up, right? Impulse move down, you go sideways, probably come back to this 5 EMA and or the 200 in here, and then potentially kick off another leg down. We see this all the time. This is not at all bullish. When you gap down below the 200 on any time frame and then can't push to even test it, that's not bullish, right? And then what's the weekly doing? Well, lo and behold, there's your weekly candle. So this week's momentum down was able to pull this level through the T line, one of the criteria to help trigger that signal. And now that we've broken it, let's look at the volume profile, because this is going to be key. Now you've broken the 20, where's the 50? Sitting right in this kind of shelf area. This shelf is actually made up of the 100 and the 50, like almost to the penny. So that's going to be a draw for price, this range in here. All of this gray indicates what? Light trading. So it's less likely, if pushed hard, to be able to hold it up, because the density of volume is this blue area. And this is the upper value range telling us that, hey, maybe this is a little bit of a premium. So you're going to be more comfortable, or price will be more comfortable down here. Back at the upper value range. And you got the 200 in here as well, and a little bit of a gap, and then a big gap. So this could get sketchy too. Nobody likes to talk about Apple ever having these big moves down because it doesn't happen very often, and obviously it doesn't. Let's look at the monthly just to put that into context. But the monthly chart, when given the opportunity, will react to price, or price will react to different levels of time and liquidity the same way as the smaller time frames. What's going to happen? Come back to the T line. If you don't hold it, hello to the 20. Don't hold it, so on and so on. When you see these charts like this, it really gives you an idea of how much fairy dust and air has been pumped into the markets since 2008 and 9 when it all began. Like, this is kind of crazy appreciation. Not at all historically normal. So it's going to be interesting if it does start to pull back, how it manages it. But for us, it's just a ticker, right? It has nothing to do with whether or not I like the phone or the computer. That's all it is a chart. And the job is to monetize the chart and give ourselves the opportunity to increase the probability of making a safe, profitable trade. And once we've kicked that off, to manage it effectively and mitigate the risk. This weekly chart presented no risk. So ugly week, so what? Didn't break trend. No, this didn't break trend until this big monster here. So there's your entry candle. There are these doji candles that we talk about all the time, and there's a reason that we show them to you at the top of these legs higher like this, so that you get accustomed to seeing them, and you'll recognize them quickly. They're usually signs. And let's say that you came across this candle and we're like, you know what, I'm just not comfortable here anymore. This is the weekly chart. This has been a great run, or maybe your options targets were hit, however you were playing it, and you take it off, and then all of a sudden price goes up again. If that was the case, like we showed earlier, what do? Well, it gives you the opportunity to get back in. Maybe this is a better example, right? If you decided to take it off here, you can see it still had more in the tank. The chart was telling you it still had more in the tank. So I don't see how, when you utilize this, although it might keep you in the trade longer, I don't see how it actually increases the risk. Right? I think it increases the reward significantly more than any level of risk, because you can see the changes quick. So this is how I how I manage my trades anyways. And what else can we look at? NVIDIA. Because NVIDIA is always expected to save the world, right? Here we go. Notice how, what do we got? We got the 50, the 20, the hundreds up there. It's a real party. This daily candle came back and literally wicked. I don't know if you can see it, but the 20 and the 100 MA have kind of started to twist together. What do we know about how price behaves when if it was to break down in this scenario? We've got all these averages that we've been trading above. We're already essentially at the point of control. So this is a very kind of consolidated area of trading in here and in here. That's obviously an extreme. This breaks down. This rolls over, breaks down. There's your previous wave's low. And here's your 200 MA, which is literally on top of that lower value range. Right? There's the top end of the range. Here's the low end of the range. That's how I would look at this. If it breaks out, this level is your target, these previous highs. If it breaks down, the 200 MA and the that lower value range automatically become a target. And of course, if it was to break it, you just look to the next level down, and if it was to break the this level, then you're making new highs. But this here, all of this parabolic price action did what? It created this gap. And we show this every week, right? How do these gaps get created? They get created by this constant movement of upward price with velocity. Again, basically blowing fairy dust and air, into these candles that want to go nowhere but up. And when they're pressured to the downside, there's not a lot in them to hold price up. And that's why these gaps become your opportunity, both to the upside and to the downside. So as price has gone up, it created the gap. So you're going to have an opportunity, I think, to monetize it to the downside. Let's throw some fibs up just really quick, and let's just take the weekly instead. This is a real extreme low. I hate to use it, but I'm gonna swing low, swing high. There's 618. Here's 50%. So 50% is 150, and 618, 134. Do these fibs, have they proven to us in the past that they're effective? Yeah, absolutely. Knowing that 50% is in here and here is your 618, having the understanding that that volume gap is here and knowing how price treats it with this kind of downside risk, do you feel more confident when you analyze the chart? Like you should, because you have real relevant information. You could break one level, you're going to find the next. If you break this level, you fall into this gap that makes it much more likely that you do find that next level. You understand that all of this gray volume is light trading, less likely to hold price up if pressured to the downside. So just continue to find these different levels that will help you box in price. But this is a slippery slope. If you fail here, you're going to look for the 200. Let's look at Tesla. Now, so if you were looking at this chart, you can kind of see this is your upper value range, that's lower value range. In the center, cutting through all of it, is your point of control. Another example of ranges. So that upper value range, if you start to roll over from there, start looking kind of downward and see, okay, what could be A, the next level down, and then B, am I creating a range? I think your range is going to be from this level up here into this lower value range where you're going to run into the 200. If you were looking at this candle as a top, you would be automatically looking for the 200. If I was to break these levels, I'd find that. If I was to, you know what I mean? So you would be able to see it. But when you're able to see it with the volume profile, I think it's a little more relevant. Knowing the 200 is there right at the lower value range makes it a draw for price. And you've been playing around here at the 100 MA with Tesla for a while. It's not the first visit of it. So if you fail, you're more likely to come back to the 200, and at which time it would be a first touch of that. Makes sense? Hopefully. And guys, if you have questions, you're more than welcome to bring them up. Just unmute yourself and ask away. Excuse me 1 second. Planet Fitness. Just curious to look at this chart because there's been a little bit of talk about it. But the weekly chart is still holding. We haven't produced a sell signal, at least not yet. And you've been able to wick the 20 and 50 and actually push higher. Does this look like it's a bit of a consolidated zone? I don't even want to call it a top, but yeah, that would be fair, right? Could even call it head and shoulders on the weekly, and on the monthly, you're still holding that 5 EMA to the upside after coming back and doing a hard tag of the 20 and just pushing right back up again. So this is proving to be a continuation move on the monthly. You could roll over, it would look like the sky's falling to come back to the 20 on the monthly and get another continuation. It would feel like, another rocket ship. Fail it, and you find the 50. Remember, these are just charts, right? They're just charts. You don't have to fall in love with the chart. It doesn't mean you believe what they sell. It is just a chart. Your job is to monetize the chart. That is it. It's not a beauty pageant or anything like that. It is just a chart. Let's look at XRP, because we've had some targets on XRP for a while. One of them was that 210, that 210 range that we hit. And then if you recall, we created this zone shortly after that. And as all we were doing is kind of picking up areas of past price, grabbing a wick, trying to find a level that makes sense where that you can connect them. That's all we've done. And did price fall into that zone? Absolutely. Could it fall back into that zone? Absolutely. This starts to look like a failed breakout, at least for now. You are getting support though from the T line, and you can see the buy pressure upward, and that is the 500 EMA, that pink. So you're above those levels, and that's a good thing. This could be just 3 green candles that end up getting a continuation, which in that case you take out the high. You're shooting for the 200 and or that lower value range, hoping that you get up into this gap, which creates a clear runway where you start focusing on this POC level that price will be drawn to, because this past price will act like a magnet for current price. And when you realize or understand that there isn't really anything in your way to get there, you'll be surprised how quickly it can hit those areas. I'm not saying it's going to stay, right? But that's what the draw will be as you approach the target. And if it looks like, the thesis is incorrect, it's okay to change your position. That's what you're supposed to do. You're not supposed to just hang on all the way to the bottom. There is absolutely no prize for that. 0. Okay. But yet, people do it anyways. This is one of these cryptos that's been around for 1,000,000 years, it feels like, SHIB. And I don't know, would you rather trade it, or do you want to just buy and hold it? I'd rather trade it. Doesn't trade any differently than any of the other stocks we look at. Did you get a buy signal on the daily after a nice move down? Yeah, below all your major moving averages. So you got to start to work your way up, one level at a time. Break one level, find the next, and that's what you did. And when you found resistance that you didn't like, you pull back to very acceptable levels. If it continues to break down, you know exactly where it's going. And having that understanding will save you a lot of anxiety, especially when things have gone on like they have lately, where there's been tremendous volatility. Right? Having the ability to, even if it's uncomfortable for you to watch, but to know with some reliability where price might go, it does make you feel better. So Zcash had a great run, trading above all its major moving averages, and at some point in time, it comes back to check the 20 MA. It's that horse not liking to be too far away from the barn. And it comes back, tags it, doesn't break down, not the end of the world. Gets a continuation, then starts to roll over. Right back to the 20, except this time it doesn't hold. And you can see this divergence was already there, already starting to show up. There's the confirmation. And now, oh no, a green candle. I was wrong. This move is reversing. No, it's not. Get on the right side and stay on the right side. And if you're not on the right side, get out as fast as you can to get on the right side. Because there is no winning. Like, if you're trying to long in here because you're so principled, right? You're going to defeat yourself every single time. So the right side of this trade would be short. The right side of this trade is obviously long. Can you imagine going back into September of 25, catching a buy signal, and day after day after day after day, prices going nowhere, but that signal's not changing? Does it tell us anything? It tells us that people are accumulating quietly, but not quite quietly enough to hide the buy signal. So you got to buy back in September. You'd have to wait a month and a bit. But what happened? Eventually, price started to climb. A little bit at first, and then it exploded. But our system told us way back here that we should be in this. But again, it's just a chart. It's just a matter of breaking one level and finding the next. And look, coming back to this level that we identified, there you go. Right? Because it's been there before. The top of this wick, the bottom of this wick. That's all we had to work off of. And there it is. Price failing, what level? So you can see that's your POC. And as that started to fade, we know that if you're going to fade the point of control, that's okay, right? It's not the end of the world. Where do we want to go? If we don't close, if this candle doesn't close above the 50, probably going to come back to the 100. And you know that wick that we saw, I think whatever the chart was we looked at earlier, maybe it was Bitcoin. This is the same kind of naked wick where price often likes to come back and tag those. And if it was to do that, it would have to break this level. It would not be the first touch. Higher probability of it failing. And if it was to break it, same story. There's that range again that we've boxed in, and lo and behold, who's in there? The 200 MA. Those are not levels that you should be freaked out about that price is returning to. Not at all. But when price goes parabolic, all of these retracements are very painful. If we were to take the swing high to the swing low using fibs, where did price come back to? 50%. That's this level right in here. Downward move, price extended to 50, right at the POC essentially, and faded again. You don't think that's not an accident? It's not an accident. These are all these levels that we show are very relevant when it comes to support and resistance. There was too much going on here for it to hold. Just not enough momentum to push it through all of this measured condensed volume from the past. So what's it going to do? Well, it's going to gas up and try again. Right? Breaking the 20 and the 50 and the 100. If it regroups, tests again, and it may test and fail. It's the old flowers and chocolate, right? Knock on the door, you want to go up? Nope. Fine, go home, get some more flowers and chocolate, and try again. But I think you have to pay attention to the 200. And also pay attention to weekly charts right now. If we look at the indexes, let's look at our NASDAQ 100 chart that we've been using. There we go. Drop this trend line down here when we could connect that first lower high. Yeah, we punched through it a little bit, but produced what? These doji candles, right? These are the things that every single day, instinctively, you'd see that and go, huh, I'm going to watch that. What's going on there? Those are the kind of candles that tell little secrets often. So follows up with a big red candle, and let's see where this goes. Right now you're trading below the T line. That's not a good thing, but isn't it interesting how price is respecting this level? If you don't break through this level, that brings you right back to the POC. Kind of, this is the lower half of this little gap. And when you have MAs that start arcing, what does that arcing tell you? That's kind of softening, right? So we'll see what happens here. We're going to use our 4-hour chart to help us pick up something that maybe we couldn't see coming on the daily chart. Big extension down, but you see the test? Tested the T line, fail. Following candle hasn't even tested any of these levels yet. And there's your 200. Okay. Overlay that 4-hour, that daily, and that weekly. Look for the areas on that on that weekly chart that price might want to come to. So let's say, for example, the 20 on the weekly is what on the daily? 49.51. So roughly in here, is that on the daily? Is that level, is the 20 on the weekly? So time and price given an opportunity to come together. Yeah, can you see them meeting in here? Yeah, because that 20 we know is a target. In the event of a pullback, you're going to come back and tag it. And again, this is how you're creating levels. So if you're looking at that weekly chart and you want to be short for whatever reason, you're using this as part of your analysis. There's your 20. Hey, where's that 20 on the daily? Right in here. What's the draw for price? How would I get there? Well, there's a big gap here. That's to your advantage. The point of control's down there. That's to your advantage because it's a draw. The 100 MA, which has been tagged before, is down there and it's a draw. And you just start to build a rationale and then wait for the chart to support the rationale. If it doesn't, move on. Right? That's why you have more than one thing to trade. Okay. Oil's getting a bid. A little bit of a pullback the other day, but ultimately it's catching a little bit of a bid. Is it going to change the world? Are we at the point where the bottom is in? I don't know. We haven't even printed a buy signal yet, but hey, let's look at that 4-hour chart. Yeah. Did it give us an early window? A little jump into the daily? Sure. Let's pretend this was Bitcoin or ETH or whatever it is that you're trading. ABC, IBM, doesn't matter, I don't care. After breaking the 200 and then coming back to test it and failing, coming back to the 50, another test, another fail, this breaks, another test. Are you not waiting for one that breaks through? Right? This would be what, the 5th, 4th, something like that, test of the 200. The probabilities after several tests of it breaking, of it going through, start to rise, right? And if you get that breakthrough on that 4-hour chart, keep in mind, you're already in profit on this candle. And let's say hypothetically that, tomorrow's candle's green and it triggers a signal, and you break through the 50 after testing it all these times. Do you see the value of a good entry now? You could have a rejection of the 50 and price pull back and you're still good because you had the good entry. Shortened up that time frame to get a good entry onto the daily, to buy yourself a little bit of elbow room if you need it. Maybe you won't need it. Maybe you'll get a candle that prints a signal, and then it's just, a process of up and to the right. Ultimately, that's kind of what oil traders are likely hoping for. But that's how, I would look at this chart. I'm looking at the 4-hour chart. I want to get a good entry onto the daily, and if I'm able to hit that and then the daily breaks, you could have a runner on your hand. At the very worst, you have a really good trade. And it doesn't matter what you're trading. So, any questions today? We can look at gold too. Just blurt them out, guys. You don't have to ask permission.
I'll appreciate if you look at gold and silver.
Perfect. We'll do it right
and
now.
the planet PL if you have time after that.
PL?
Planet labs. Thank you.
PL.
Yes.
Okay. So here's gold's daily. A little more, volatile trading behavior than certainly this move here, but at the end of the day, the chart is still bullish. Yes, I can understand how people are saying it's a little toppy. I get it, but I mean, it's still a bullish chart. You're getting support at the 20. You're trading above the T line, trading above the 5 EMA. Flip to the weekly, and it's even a little more clear. Like, this is a very strong weekly chart. And we know as we look at it, okay, if it was to break down a little bit, it'll break down level by level. And when you see, I don't want to blow this up so much that I lose what I'm trying to show you, but you see how you have moves like this? You have a move up and then a bit of a staircase, and then a move up and then a bit of a step, move up and a bit of a step. When you come back and start to retrace, and I'm not saying that's going to happen tomorrow, but what I want you to pay attention to, again, this could be Bitcoin on a 2-hour, 3-hour, 4-hour chart. These levels like this that get printed, quite often when price comes back, it's going to be drawn to these levels quite strongly because of that consolidated price. And just for fun, like,
I mean, the charts never go 45-degree angle to the right. So, and there's always those key levels where we do see sell-offs.
Yeah.
And KP was talking about rebalancing, like selling what they had closer option expressions and buying it further dates, basically.
Yeah.
Right? That's what I understood. So that's why I decided to kind of keep my contract. I have one in January 16, and I have some in March expiring. So I wanted to, see what the future is going to hold.
Well, where does March show? Here's March right here.
Did you look at the volatility of the SIBO on the SLV?
No, I have not.
Okay.
This silver chart, this is your weekly. And this is why, like, it's not hard to use this script. There's your weekly buy signal. You bought that signal. When are you going to sell? Because that's the question you're always asked. When do I buy? When do I sell? Well, here's when you buy, and I haven't been able to tell you when you sell yet, because the chart hasn't told us. When do you sell? When you're tired of making money in this move, or when you feel there's some risk. or the chart tells you that you should take it off. But the point is, even if you bought the weekly signal back in April of 25, 9 months ago, whatever that is, you're sitting pretty. You're in the driver's seat. The hardest decision that you have to make is, when are you tired of making money? When do I take it off? When do I take some off? Whatever. That's a great problem to have. And I know this looks so stupid simple. Well, let's look at another chart then. Fine. What do you want to look at? Here's US dollar. Or DXY, I should say. Weekly chart. Let's look at the daily. That's what I'm waiting for. Here you go. Did the chart tell us that it was bullish? Yes. Did it give us a buy signal? Yes. Did it start to break through resistance that was in front of it? Yes. What's its target? Is there a target that we can see anywhere? Yes. This move will be looking to take out these highs and the 50. Was the move down, easily identifiable? Yes. See these candles, like these retracements higher that fail? Like we've shown a lot of those today. This is why I wanted to take the time for you to see them, because you're going to start to see more of them, I think. This is the Friday the 2nd. Let's go to the 4-hour chart. It's probably going to be Friday. No, Thursday. Tuesday, I'm sorry. So Tuesday, you get a buy signal. Like again, whatever it is, this chart could be Bitcoin, IBM, blah, 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 doesn't matter. You get an early signal, you take the trade. How long do you stay in the trade? Well, as long as you continue to break through resistance and look like you have an attainable route to get to your targets. Let's say that this 99.21 was your target, because it's been a level of, like, this is just a level that I've put on here. If that was my target, if this looks like it's going to fail in here, GK, am I going to wait to see how far it fails before it gets here? No, right? Like if it's going to fail, then I'm going to have to, it invalidates that level, for, at least for the time being, and then you try again. But it, gold and silver still look like they want to move higher. The dollar looks like it wants to move higher. So it printed a 4-hour. It printed a daily buy signal, but it hasn't quite printed a weekly buy signal. Close, I would say. Very close. Yeah, very close, but do you see what confluence can do? Like why, this is the example that I was hoping to find today as we're going through these charts. So you have a 4-hour chart that gives you a buy signal. A day or two later it shows up on your daily chart. And then hopefully a few days after that, it can find its way onto your weekly chart. And by that time, you are in a very, very good place. You don't have to spend all of your time on the short time frames. I think mentally people think that's where you're going to make all the money. I think you can spend better time on some of the longer time frames, taking advantage of trend moves. Like what appears to be a trend move on a 5-minute chart is probably just noise on the daily that doesn't ever appear, right? So I like that the 4-hour daily weekly approach. Does it always turn into all three? Of course not, but you do the best with what you got in front of you. What else can we look at? Litecoin look like Bitcoin? Looks like all of the majors, right? Bit of a move up, starting to roll over, coming back to test support. So a lot of these charts look the same, fortunately or unfortunately. Microsoft. Now I know we showed Microsoft a couple weeks ago. I think we've been in here before, obviously. Put the volume profile back on because it's going to tell us something. All right. So Microsoft Daily, I think real easy to see price kind of wick this upper value range and start to pull back hard. Like that was a very clear signal, right? If you were to see that, you're like, huh. Like even the gap, that further gap down, at some point you have to trust your instincts and trust your chart. See how this big move up was trading above all your major moving averages? Now you're going sideways with the inability to move higher, and then you start to break down. And when all these averages are twisting together, it kind of creates these moves with momentum because there's nothing beneath to help you find support because you've broken them all as they were consolidating. And look what happens when this divergence opens up to the downside. Like price just breaking the 50, breaking the 100. What's the next level down? The 200. Did you find it? Yes. Bam. Now, if you were short, would you have a target down there? More than likely. Good entries, safe entries, track and trap price. It's like shooting fish in a barrel once you've got trend on your side. The ability to read price is awesome, yes. The ability to read trend is equally as important, so that you don't go long here and make a mistake. Is this resistance? Yes. 3 green soldiers, here's some resistance, but the trend was still down. And as long as the trend is down and the signal that you're working under is still the boss. And lo and behold, where do you think we want to go? Hit the 200. First time you hit it since you gapped up over it, you got a little bit of love. Took you back to the 20. Failed. Test again. Failed. Obviously this is a failed breakout. Price came back to do what? Take out these previous waves lows. And here we are failing this 20 and 200. It's kind of a interesting spot for Microsoft. Let's look on the weekly. Okay. So we've come all the way back to the 50. If we weren't running this, I would be looking at that chart going, hey, I'm getting support from the 50. Maybe I should buy it. It's holding the 50. I'm being really honest with you. That's exactly how I would look at it. And you know how you guys tell me about your frustrations from time to time? Well, this would be mine, right? This could be an hourly chart, wouldn't matter, but I would see this setup and I'd see the support from the 50 and I would probably long it. Now I look at the chart a little bit differently. Now I'm looking at it going, okay, there's the 50, but I do not like this. And I see this gap here. That's a tiny shelf, and there's your POC. All this is like a big super slider. And if the market's telling me this is still downward, the trend is down, this is just a green candle and a downtrend, and then at the end of the day, I don't think it's going to give a crap about the 50-day moving average. It's getting support, yes, but I doesn't look like the trend is changing. So having the ability to use this now saves my butt constantly. Makes perfect sense that this gets support here and maybe bounces. And if anyone were you to tell me that, I'd be like, yeah, I can see that. But now that I understand how the trend is represented, changes everything. And it prevents me from getting faked out. Which can happen, right? Happens all the time. But not if you know where the trend is going. The chances of getting faked out go down dramatically. Let's look at Bed Bath & Beyond. It has a big day today. Little double bottom pattern. KP, you'd probably like that right at the bottom, at the lower value range. Like, these are things that you'll see on your chart, and you go, you know what? Yeah, I can, you can see how that might be a trade. Break through the 50, break through the 20. What do you think it's looking for? It wants to test the 200. It would be the first time it's seen it since it broke it back here, so you're susceptible to a bit of a pause. Or maybe even a failure, and if it was to fail, it would just come back to this level here. Ultimately, what it wants to do is get into this gap, get through the 200, into this gap. Obviously, that puts the 100 MA in play. This kind of structural trading here through, you're going to want to push and then start looking for these other levels. Do you have an area that can trap price? Yeah. It's very clear. So, big day, but this green candle, when did it really? Monday. And if we go to the 4 hour, Friday. So you would have been in on this candle right here, because you'd be watching the 4 hour chart. You'd get in on the 4 hour, which turns out to be this candle on the daily. And today, as everyone's going, oh my gosh, we got to get some BBBY. You had yours days before. Printing money. You don't have to reinvent the wheel. This will be as simple or as complicated within reason as you can make it. I'm trying to take the noise out of the charts. I'm trying to take some of the risk out and making the entries long and short clear and safe. If we do those little things right, you're more than likely going to be okay. So now that you're looking at this daily chart of BBBY, and you've printed your daily signal, you printed your 4 hour signal like we already showed, you don't yet have a weekly buy signal. But if this was to print a weekly buy signal, okay, there's your 20 there and your 50 in here, 100, 200, big volume gap. A little bit of one in here too. Do you see the value of having the ability to have confluence from the 4 hour to the daily? Some people would just be happy with a good 4 hour trade. But if that 4 hour trade shows you that it's going up and to the right, and you're on the right side of the trade, and the trend is your friend, and that transmits it and translates itself onto the daily and then onto the weekly, do you have a problem with that? The only problem you would have had is not knowing when to get on the right chart at the right time. So we just want to increase the probability of you having a decent trade on that 4 hour chart that you can be happy with. That hopefully finds a way, if we do our jobs right, that runs onto the daily and then longer time frames. And is that why they call me trend trading? I don't know. I just trade charts, man. That's all I do. Stick to my time frames, use fractal analysis, look out so that you can see what levels price might want to touch up and down on the daily so that you can protect yourself appropriately on those shorter time frames that you might be trading. Okay? So if there aren't any other questions, we can shut it down for today. And I certainly invite all of you into our Telegram group. It's a free group. You can just come in and hang out with Chart Geeks if you want. Our voice chat's open frequently. We do sessions like this quite frequently. And sometimes we just kind of shoot the breeze as well. I invite you to find these videos are on our YouTube page at Blunhouse TA on YouTube. And of course you can find them on this account on Twitter, the @Blunt420 account. They'll all be in there as well. And please, if you get an opportunity, if you find any value in these, like these videos, subscribe if you can, and join us for our own one-on-one sessions too. So thank you guys for hanging